Hello and welcome to the week ahead video. Just a couple of things to brief you on for the next 5 trading sessions. Likely to be a disrupted, thin volume and muted news flow 5 days of trade due to the first day of 2014 occurring on Wednesday. As such, all global markets closed on that day to celebrate the first day of the new year. But in terms of risk events this week, there are a couple of key releases that you definitely should keep your eye on, first of which being the manufacturing sector. We see a couple of releases across the next 5 days, the Chinese and the Eurozone manufacturing PMIs, alongside the UK counterpart, with the latest suggestion as to what the recovery can look like in the first months of next year. But elsewhere though, the Fed Chairman Ben Bernanke is due to be speaking on Friday, one of his final speeches as the Federal Reserve Chairman as he departs his post in the next coming months, giving up his seat to Janet Yellen. This is as 10-year yields in the US reside above 3% for the first time in 2.5 years as we go through the new year after the announcement of the Fed QE taper some weeks ago. So $75 billion, the new number to get used to for the Treasury markets as we're heading towards the early meetings of next year for the Federal Reserve, where they will see if they will keep continuing to trim the pace of their QE program as we progress through the new year. But elsewhere, focus is likely to remain on the upcoming week after this one as volumes come back to normal and we see just how 2013's performance can stand as we filter through into January. This is after the Nikkei 225 finished the session on Monday for the final trading day of 2013 with the best yearly gain since the early 1970s for the Japanese index, with dollar yen residing at a 5-year high as we progress through into December 31st. In the meantime, that's all from me. I hope you've had a fantastic weekend and I hope you have a good week going forward.